Here's the Elliott wave forecast for February 23rd, 2011. On the S&P 6-month chart, from the November lows, it looks like we completed 5 waves up. It'll be wave 1, wave 2, wave 3. Telltale sign is the flat wave 4 that we got in late January. It'll be wave 1, wave 2, wave 3, flat 4, and then the 5th wave up into February. So we're going to retrace at least the move from November to the peak in around 1340, 1344 in the S&P. First layer of support to the downside would be 1300, which is the 0.618 retracement of the move from 1275 to 1340. So 1300 would be the first layer of support. And if we break through 1300 this week, we could test 1275 or the previous four. That would be a wave 2 retracement of the move from November to the peak in February, or the short-term peak. For the Nasdaq, again we have the same pattern: wave 1, wave 2, wave 3, flat 4, wave 5, and the first layer of support to the downside would be 2730, which is a 0.618 retracement of the move from 2675 to 2844 approximately. If we break through 2730 to the downside, we may test 2675 or the previous four. That would be a wave 2 retracement that would retrace back to the previous four after 5 waves up. For the Dow, from November lows, wave 1, wave 2, wave 3, flat 4, wave 5. The Dow didn't get hurt as bad as S&P and Nasdaq, but it may actually start to follow to the downside of it. There's continuation into next week or into this week. Worst case scenario I can see is a drop to as low as 11,800 to the downside, or 118 in the diamonds. That'd be the previous four after 5 waves up. I don't believe that this is the beginning of a very large correction, because the bears have come out of the cave. Have come out of the caves like Tom DeMark and all those dudes, and they're like 13.9, 13.9, crash, crash, crash. They're calling for a crash again. I mean, every time we go down like this, they think it's going to be a crash. I don't believe it's going to be. I think it's just a minor blip in a bull market. I mean, I'm going back, looking at the NDX, going back 5 years, because this one chart uh, is what makes this excuse me this one chart has a third wave pattern, because it's exceeded all fifth wave patterns. Every fifth wave target that is possible in the NDX has been surpassed, and we broke this 2007 high. So people are thinking that we're going to hit 0.786 and then drop in wave 3 down. I don't believe that, so I think we're in a third wave. It just today's setback, quote unquote, was just a minor blip in a bull market. So this NDX chart alone is breaking the 2007 high. What can I say? I mean, we broke through the 2007 high in the NDX. NDX is a major index, and we've broken through the last target to the upside for fifth wave is 2330, and we hit 2410 approximately, and that's way above. That's about 80 points above the fifth wave target. So I don't believe this is a fifth wave. It's too strong. And here's another big thing. The RSIs got reset in one day under 50. Look at the RSIs. RSI NDX is under 50. NASDAQ RSI is under 50. I mean, this happened in one day. The S&P close to 50, almost under 50. Diamonds not quite 50, but approaching 50. So we reset the indices for another move up. So if tomorrow we drop like 300 points in the Dow, then I believe that it could be in a bigger wave too. But I just don't believe that we're in a bigger correction starting today. I don't think it's gonna happen. So if you're bearish, I mean you have a little ammo left in your gun. Okay, you have a little bit of ammo left, because today could have been start of a larger correction, not a big, huge, massive correction, but a retracement of 5 wave pattern going back to November. And that's all I believe right now. That's a wrap.